Welcome to Rebank, your front row seat to the future of finance. Andy Kangpan, welcome to Rebank.
Thank you for having me. I'm a big fan. It's great to be here.
Well, thanks for making the time. It's great to connect. I've come to know you and your partners, Mickey and David at Metalayer over the past, I guess, little less than a year now, but certainly have built a lot of respect for who you are and what you're doing. Maybe you want to kick off with an intro and tell us a bit about your background.
After a few years at the first firm I worked at, which was called FF Venture Capital, I then moved to a firm called Two Sigma Investments, where I was for a total of about 7 years. And initially, I started out as a generalist investor there, but crypto was a pretty big part of my focus from the get-go. And then over time, I just started to spend more of my personal and professional time looking into the space. So much so that ultimately, for the last handful of years that I was at the firm, I ended up leading all of the firm's investments and efforts in the category. So that included things like private investments into startups, but I also worked really closely with the hedge fund more broadly on a number of different strategies that they explored over the tenure that I was there. And that all led up to me starting Metalayer with Mickey and David a couple of years ago. But that's been the journey that I've been on today.
Mm-hmm. So tell us, or at least those in the audience who aren't overly familiar with Two Sigma, kind of where that firm's DNA comes from. I'm sure it had a profound influence on even the way you guys thought about crypto venture, differentiated you perhaps from your average crypto venture fund. And I think even just your kind of mindset and the way you think about the market is probably influenced as well. So tell us about Two Sigma.
So Two Sigma is probably most well known, broadly speaking, as a quantitative hedge fund. They've been around for about 25 years now. And their bread and butter is really applying large-scale data systems and automated technologies to the investment management process. Specifically, they focus on traditional asset classes, so things like equities, as an example. And they've been immensely successful at that. So they manage something like $65 billion in assets. There's close to, I think, 2,000 people there now. And from a DNA perspective, what's really interesting about the organization is it actually looks more like a tech company than it does a trading company, at least what you would imagine historically a trading firm to look like. And that it's mostly engineers. There's also something like 200 to 300 PhDs that are focused on a wide variety of sort of data-driven functions within the organization. And so there's sort of like that data-driven engineering ethos that underlies everything that the firm does. And that includes how we approach things where I sat on the ventures business, in that we were looking to apply data science and engineering systems to make the venture capital lifecycle more efficient in terms of how we approach the job. So that's like sort of broad strokes what Two Sigma, I think, is like most well known for, and also a flavor of the culture. Specifically, sort of what crypto looked like for the organization. So when I joined Two Sigma, that was in 2017. So that was right in the middle of the really big sort of ICO cycle. And at that time, my now partners, Mickey and David, we were sort of like the young guys on the team at that point. And we were personally very interested and had spent a lot of time in crypto. So we volunteered to take a serious look at the space as it started to cross from this like fringe curiosity into something that felt like a real technology sector that could be invested into. So given like Two Sigma's legacy, their interest really came from two angles. So one was actually more from the hedge fund side. And this is something that I think they're still sort of thinking through today, as are many large trading firms, which is, could crypto evolve from a relatively small asset class at that point in time? Could it really evolve into something that you could actually trade over time from an institutional in an institutional scale? And so we led a lot of work into looking into the various sort of market participants at that time, the sort of infrastructure that existed, and sort of gave our thoughts to the organization around like the current state of things. The second question that we looked at was really more from the venture perspective, but really took a broader look at the industry and asked whether the blockchain technology could meaningfully reshape how value moves through real world industries. And specifically, given the organization had more sort of like a trading background, there was a really deep appreciation for the underlying financial infrastructure that really powered financial products and services. And so we were starting to look at financial plumbing, like how could blockchains ultimately reinvent some of those technologies. So that was sort of like the flavor of things that we looked at. Culturally, crypto, and this is true, I think, for a lot of financial institutions up until a couple of years ago. Culturally, crypto was always something that was a bit of like the tail that wagged the dog, and that I think everyone felt like crypto was a very interesting space. There were a lot of smart people working on it. It was clearly growing very quickly, albeit like the scale of the industry at that point in time, and even now to a certain extent, is still relatively small compared to the scale of things that like large scale financial institutions and asset managers think about. But there was also a significant regulatory overhang at that point in time where it was very unclear, and obviously even now there's still a little bit of lack of clarity around some of these things. But whether like how the sort of regulatory agencies in the U.S. thought about crypto, and the industry was getting a lot of mixed perspectives from those organizations around that. So because of that, there was always a really big hesitancy for the firm to do more in crypto, and that ultimately played a lot into the founding of Metalayer too. But that was something that really was a roadblock for us and also many of the other firms in the space.
Yeah. Direct question for you. Why did Two Sigma fund a crypto VC strategy? These are 200 to 300, like basically equity, quant, algo traders, and engineers. In a sense, like sure, you could think about like intellectual curiosity around crypto or maybe even like DeFi infrastructure, but the market is tiny. Yes, maybe like spreads are big. Like you could make an argument for crypto trading, and maybe that was a part of the firm's strategy as well. But why venture? It seems like a very different mindset from algo trading.
At least in the context of Two Sigma, crypto venture was a sleeve of the broader venture capital strategy. So at the time that I left, the venture capital business managed something like 1.5 billion in AUM. And that spans a wide variety of technology themes. So AI continues to be a major bucket of their focus. But crypto was, one part of that overall strategy. The organization just looked at venture as a way to gain exposure to some of the trends that would ultimately drive growth in the economy in the next 5 to 10 years. And there was definitely a contingent of people in Two Sigma who had a deep appreciation for how the financial system actually works from an infrastructure perspective, and saw how the technology could be used to improve everything from payments to capital markets infrastructure, broadly speaking. And then there's also a class of people who saw that it's an asset class that has a lot of volatility, and people will trade it and likely make a lot of money doing that. And the type of infrastructure that's needed in order to make that a more institutional ecosystem also could be an interesting way to, from an investment perspective, way to generate a return. So I think like the interest came from that perspective. But as I kind of alluded to, some of the tension that we ran into was that because the organization was so large and the space was so nascent, there was a lot of tension, especially given the regulatory risk that existed at the time around like how much should the organization actually be investing into this type of strategy, given the risk is pretty significant on the regulatory side. And given the market as a whole, while it has been growing, like we ultimately don't know how big it's going to be. And so that actually caused a lot of tension internally when we tried to push the organization to do more in the ecosystem.
Mhm.
And by the way, this is not just a Two Sigma specific thing. I think if you go talk to a lot of individuals who worked at HFT firms and financial institutions that were working on crypto initiatives at that time, so this is like 2020 to
Right, right.
2022, 2023, they all sort of faced this issue, which is like they had an initiative working on the ecosystem, but not enough buy-in really to do it in a way that was high conviction. And so ultimately, that played into our thinking around why a standalone firm like Metalayer should exist. But yeah, so that was some of the dynamics at play.
So we're recording this the day after the New York Stock Exchange announced that they're building basically a new venue to trade tokenized stocks, it sounds like, but in a relatively on chain native way. Settlement will be maybe instant or atomic. It sounds like stable coins or other, tokenized cash will be used for all payments. And there's some kind of integrations with the traditional equities stack in terms of like shareholder rights and voting and dividend participation, but also 24/7 from launch, from what I can tell. I mention that as an example because, well, it's very clear to me that we're at a moment of reset in terms of how we should be thinking about this space. I think basically from, in a sense, like the moment that we moved from Bitcoin to Ethereum and the ability to build financial applications on blockchains, value creation, value capture has broadly been by a group of crypto native people and investors who spoke that crypto native language and were focused on that same sort of like crypto native philosophical alignment. Not here to get into the philosophy of it today, but thinking very specifically and pragmatically about where value creation, value capture are likely to go. It seems to me like the people who have been in this space since its inception, both founders, users, capital allocators, investors, are not necessarily best poised to capture the value that will be created going forward. And I could be wrong and things could shift again, but so much of the what seems like the opportunity and the adoption is coming from regulated finance. So much of crypto heritage has not been focused on working with regulated finance, building for regulated finance, solving problems for regulated finance. I wonder if you see that same kind of bifurcation in the market, if you agree or maybe don't, around just a meaningful divergence in a sense skill set and ultimately where value creation and capture are likely to fall.
Yeah. I mean, I 100% agree. And I think there is a very big change happening in crypto at large, but especially in venture capital. I think there's a very significant shift that's happening that's bifurcated the market, especially in 2025. But I think it's been a slow sort of shift that really has been taking place post FTX in 22, 23. So we talk about this a lot internally, but I think the really big thing that's been happening, broadly speaking, is there's been a very significant cultural evolution that's happened in the past couple of years, from one where the industry has been driven by market participants that have a very sort of like speculation first mindset around crypto and what's useful about crypto, to one that's more rooted in pragmatism and driven by entrepreneurs and investors that want to see the technology applied in real world financial systems. And it's this cultural discontinuity that I think is causing a very significant shift in who's going to be able to capitalize on the market going forward. And I think you can sort of like, just looking back in 2025, you can see this really in a number of different ways. Like, for example, among venture investors, if you ask, most firms that were active last year, what were the most exciting things you looked into from an investment perspective? I think in any other year, you'd probably hear some flavor of infrastructure. You'd hear restaking, you'd hear bridges, you'd hear like new L2s. But last year, really what you started to hear was actually it's stablecoins. It's applications of stablecoin rails in payment systems, like novel neobanks, stablecoin enabled credit cards. These were all the fundraisers that really like drove most of the headlines in the industry. I think it's just like a proof point of the sort of shift that's been happening in the market. And you see this even, I think, even like the liquid token markets, which as of today at least are have been somewhat depressed, but you're hearing increasingly large cohort of token investors starting to put out mental models and frameworks for like how to think about the value of tokens more from like business fundamentals, as opposed to having more of like a comparative valuation mental model, like, oh, like, X protocol is valued like this, therefore this is worth it at this price. This sort of like circular thinking, where I think now what you're starting to see is more of like a rational, logical framework for like how to think about what these things are worth. So all of that is, I think, evidence of this sort of like big cultural shift that's happening.
Mhm.
And I think as a result, like if you look fast forward a few years, where investors are going to find success, like the playbook is just going to look very different from what people have seen in the past couple of years. And I think a lot of the large firms will, I think, be able to navigate that. and adapt to this new reality. But I think a lot of investors will struggle. And the playbook I'm specifically talking about, like one example of that is these sort of like high FDV, low float token launches that really drove a lot of the returns for venture investors over the past decade or so. Like that sort of has run out of steam in the past couple of years. If you look at a lot of those launches that have happened in the past couple of years, with a few exceptions, like for the most part, they haven't been that successful. And so I think going forward, really the sort of companies and protocols that are going to be successful are going to look very different in terms of the types of products and services that they're building, the types of business models that they're trying to build. And so it's just going to be a very different industry. And I think investors that have a very deep appreciation, I mean, I'm a little biased in this, but I think investors that have a deep appreciation for where crypto has product market fit, namely like where it intersects with regulated finance, but also have a little bit more of an institutional background and understanding what it takes to build enduring businesses, I think we'll have an advantage in this new environment. So I very much do think we're entering into a new phase of the crypto market.
Yeah, totally agree with you. I think you can make a very valid argument about crypto, or at least the crypto philosophy being co opted today. I think you're right in that the future of the space will be very different and will be more geared toward kind of bridging toward upgraded financial services, which interestingly is how I got into the space to begin with in 2014.
Hmm.
Realizing that cloud, mobile, and APIs were a better stack than brick and mortar branches to build a bank on. Basically, you could use modern technology to improve financial services, and that's the trajectory that I've been on. Ever since. The people that invested so much in a kind of philosophically motivated and fundamentally different system, I think are, at least as of right now, kind of the waning influence in the space. I mean, we saw the market structure bill and potentially some, for instance, defense of DeFi software developers. But at least my takeaway in reading the draft of the bill last week and the commentary that came out around it, that kind of decentralized protocol developer protection was just not really the main focus of this new regulation, which is ultimately going to be about how do we embed more of finance on a new technology stack in a way that serves users, consumers, market participants. It just didn't at all feel like the main kind of cohort that was the people who have ultimately kind of built the foundations that we're all kind of expanding upon now. I guess pulling all that together, like what does that mean from an investment standpoint? How are you thinking about the market differently now than you were even 2-3 years ago at Two Sigma?
I'll say like how we're a couple thoughts on just like the current state of the philosophical motivations of the market, and then how we're thinking about investing in the space. I would hope that despite the sort of big cultural change that's happening and that the space is just becoming more institutional, that it doesn't leave its strong foundations that the cypherpunks laid over the past decade. And I do think a lot of those values are really positive. For example, like just the ability for anyone with an internet connection to be able to access a permissionless financial system. I think for most people in the US, that's probably not that important. But if you ask a lot of people in emerging markets, it's incredibly important. And where you really saw some of the early adoption of stablecoins was really in places with high inflation or with significant capital controls. And so I still think the values that we're trying to embed into this new financial system that we're all trying to build, I think hopefully manifests in ways that are still discernible through the end of this sort of like institutional phase. But I would say like what we did learn over the past decade too was a system that is permissionless but has no rules and no accountability is also one that will result in a lot of pain for a lot of people. And we've gone through these cycles of extreme boom and busts because there just hasn't, I mean, one of the reasons, at least from my perspective, is that there really were ways for insiders to really take advantage of this system in ways that would be very difficult to do, at least more difficult to do in the traditional financial services industry. And I'm not naive. Like that's this stuff still definitely happens in TradFi, but like I think that rules are helpful in many situations. So, but I hope we don't sort of leave the foundation going forward.
Sorry to jump in, but it is interesting though that it's kind of through ultimately rule setting and legislation, which is frankly like long overdue. And I don't think there's any argument about that. And therefore, like providing this sort of legal and regulatory clarity to, in large part, address the crime and grift that had been happening in crypto for so long and all of the sort of consumer pain and loss that had resulted by formalizing that and kind of enshrining it in a legal and regulatory framework. It basically paves the way for incumbent financial firms to enter the space. And in fact, I think
Hmm.
what a lot of people, at least at this sort of crypto tradfi intersection, are excited about is how do we make it easier for like a BNY or State Street to spin up a digital asset custody infrastructure, or for the New York Stock Exchange to launch a dedicated tokenized stock trading venue. But it's kind of like in one swipe of the pen in formalizing legislation like this, and we'll see if it actually happens. But that what you do is you basically remove the barriers for the biggest firms to enter the space and just accelerate that transition from more of like a builder ecosystem into one of one that's led by financial incumbents. And then you get into all
Hmm.
the questions of, okay, value capture, because if you're an investor in a tokenized stock company, you read the New York Stock Exchange announcement, it's not immediately clear how that's good for your startup. That does not look like some sort of collaborative like integration opportunity. That looks like TradFi just coming in over the top and kind of
Hmm.
retaking the market.
Great thing we debate often at Metalayer when we think about investment opportunities is where incumbents have outsized advantage. I mean, if you look at Robinhood as an example of this,
Thinking about that too.
I mean
Yeah.
yeah, I mean the distribution they have into retail investors in the US is second to none. And so, we get pitches all the time of companies that are trying to build competitors to Robinhood, where the wedge is some sort of like crypto enabled feature where it's like 24/7 trading of stocks, or it's access to a broader array of investment opportunities that are tokenized, just as like examples. But it's unclear to me like where those firms have an edge on distribution relative to Robinhood. So yeah, I think in this new age where large financial institutions have permission to build in the space, people have to think about this question more deeply. And I do think it will be the case in many scenarios where the incumbents will ultimately win. But I'm also a big believer in the innovator's dilemma. I also think big institutions don't move quickly. They have a lot of vested interests. They have business models to protect, so they will act in their own self interest, and as a result, I think move slowly to new opportunities in many situations. So I don't think that means that from a startup perspective, the opportunities aren't there. I mean, one example of this, like something we've been looking into, where we think banks actually, even though they're moving more into crypto, like more on chain, will be limited is, if you look at regulations from the post GFC, like Dodd Frank, that limits the ability of banks to actually lend against collateral that would be deemed as relatively risky. And I think this is a really interesting use case for a next generation of DeFi protocols to get into that can offer credit to counterparties on chain in ways that banks wouldn't be able to, where they can use on chain infrastructure to bring capital to get together and actually lend against that collateral. So, in effect, kind of becoming like a prime desk on chain where like traditional banks historically wouldn't be able to do this. Anyway, so it's like things like that. I think we're starting to think about more deeply, like as these banks and institutions come on chain, like where are their um, barriers for them to move quickly or meaningfully because of various factors.
Hmm. Hmm. Yeah. So to the point then of how you build an investment firm, for this phase of crypto market development, how are you thinking about that at Metalayer? I mean, crypto VC at the core, but as mentioned before, very much view you guys as building a different type of firm in this space. And I don't know how much you want to talk about today, but I'd love to hear what your thoughts are, how you guys are looking at that internally.
Yeah. So I think the thing to start with is one, I didn't share much about my partner's backgrounds, but it starts there. So I come at the space more from like a venture private investor. Um, Although I've had experiences outside of that, like that's certainly like the thing that I bring to the table in the partnership. My partner Mickey worked with me at Two Sigma as well on the ventures team, but he left and joined Chainlink very early on in about 2020, right before DeFi summer really took off in full bloom. So he got a front row seat and understanding how crypto startups operate, especially in an environment where the market is growing very quickly. Um, and then my other
He
partner,
led growth,
David,
right? He was involved in a growth, like growth and go to market and marketing function for Chainlink.
yeah, that's correct. So
Yeah.
he joined that part of the organization and was instrumental in getting Chainlink out into the ecosystem to be adopted as basically like the standard Oracle now. Obviously, there's like a little bit more competition, but
Hmm.
I think even to this day, are still predominantly the market leader in Oracle infrastructure. So he was a critical part in that. So he really built like firsthand experience and understanding more from like a company building perspective in crypto, what it takes to succeed. And then my third partner, David, is the technically minded one of us. I think when you think of Two Sigma, he's like the type of person you think of. Like he studied math and computer science in undergrad. He started out as an engineer at a what was then a small fintech startup called Adapar. And then he was recruited into the research and engineering organization, Two Sigma, where he developed a number of projects for the organization across various asset classes. And he's also spent time at other places like Meta and Marshall Wace, which are very sort of like top tier engineering organizations. So, anyways, it all starts there where I think it's rare to have a partnership at a small fund like ours that has really deep and broad experience across investing, operations, and engineering, and also has a very shared passion and interest for the sort of like institutional phase of the crypto industry. And so that's going to permeate everything we do as a firm. Back to your question of like how we think about building Metalayer in a different way than I think what's typically done. I think it all ultimately, we're from a venture perspective, like we are hyper focused on becoming a critical partner to the founders throughout their journey building generational digital asset businesses. We're very fortunate to have the support of an incredible group of LPs who have given us an opportunity to pursue that mission. And we're very lucky to be working with a great group of entrepreneurs, including yourself, already in the portfolio. But I would say like this sort of like age that we're in, I do believe venture capital is an increasingly difficult and dynamic business to be competitive in. And I think that's especially true in crypto, where investors have the ability to engage with the industry in a number of different ways. But I think, just to make the broader venture capital perspective, I saw some crazy stat. I don't know the exact number, but I saw some crazy stat that like Andreessen Horowitz raised like 70% or 80% of like all the capital in the industry in 2025, which just goes to show like their capital has very significant network effects around like scale. So like the market's increasingly consolidating around these mega funds. So like if you're a relatively new firm, you have to think about how are you going to add tangible value to the founders you work with beyond that initial seed check. And I think you have to have a very concrete answer for that in order to have an edge in this space. But I think that gives a team like ours with like a very multidisciplinary background, an ability to support our founders in very unique ways. And so that includes things like operating on-chain investment management strategies or, being more active in liquid token markets. I don't want to like open the kimono completely on our plans there, but I'd say that we have been incubating some of these adjacent strategies for a period of time now in service of becoming a more value additive venture investor. And looking ahead into 2026, we expect to scale those strategies and also be more public with what we're doing as a firm more holistically.
Hmm. No, I mean, in the same way that it feels like a generational opportunity to build infrastructure or even kind of definitional applications in the on-chain finance space, uh, and to do it in a different way than you would have in like a fintech 1.0 world. It seems to me like the same is true as an asset manager in a sense, which is what you are. Like just building a traditional venture fund, which has, X million dollars in a bank account, and you talk to founders, and then, maybe you kind of wire some of them some of your money and take an equity stake in their company. That feels so limited and short-sighted in terms of how this market is evolving. Everything from capital provision slash LPing, like across various areas of crypto, to like on-chain and or liquid funds, what you see curators doing, who are effectively, building kind of on-chain native or crypto native asset management businesses. We really haven't started to scratch the surface when it comes to building that sort of business specifically focused on a tokenized financial stack. It's certainly an area where I'm spending a lot of time now thinking about. Okay, great. So like we all agree now that everything will be tokenized, but we're still having the
Mhm.
same conversation, or at least I see the industry still having the same conversation as it was having 12 months ago, which is, will it be real estate or art or equities or bonds that lead the way? I don't see anyone talking about the second, third order effects of that, and any of the, basically financial systems, platforms, tooling that are used to kind of, support and run the financial system. What does it mean for the other 95% of the industry when all value, whether it's cash or assets, exist in tokenized form and settle instantly on upgraded settlement rails? I just don't see anyone having that conversation. I think that's going to be an interesting exploration that we'll collectively do over
Mhm.
the course of 2026.
The core thesis of our firm is that the financial system in the next decade is going to move on chain. And so as venture investors, it's great for us to be, equity owners in that transformation and invest into the startups, really catalyzing that transformation. But if that is true, so if all financial activity is going to move on chain, obviously in phases, but over the next, call it 10 to 20 years, we personally believe, just purely more from like the investment management perspective, that opens up an entirely new universe of strategies that you can employ to actually generate a return for your investors beyond just being an equity investor in the startups that are affecting that change. And you see sort of the first iterations of this, as you mentioned, like with firms like Steakhouse that are doing an amazing job of demonstrating how you can use on-chain infrastructure to build a new form of asset manager on chain. And I think that's where the space is going. And increasingly, I think venture capital will always be a function in the market. But crypto is this unique sort of ecosystem where increasingly, I think you'll see investment managers do venture, but also a variety of other strategies because they deeply understand this new infrastructure that's coming online, have very deep relationships with the projects and businesses that are actually building that infrastructure. And I also think it'll just make them a more impactful and value additive partner on the venture capital side because they'll be able to work closely with those teams as they scale. And so I think that is the future that we see for the industry and something that we're working hard to do.
Amazing. Well, I think that's a perfect place to wrap. I'm excited about the stuff that we are collaborating on, which we'll be able to share more about soon. And your partnership in general, really top notch group of people to work with. Excited for you guys.
Appreciate that, Will, and really fortunate to be working with you. And thank you for having me on podcast.
Andy Kangpan, thank you very much for joining us today.